Are you learning to day trade, but it always seems like you're taking one step forward but two steps back? You might be making these 5 deadly trading mistakes. Learning to day trade is probably one of the hardest things I've ever done. Well, besides learning to drive a Lamborghini. And there's a huge learning curve involved when it comes to day trading. From building up the discipline to wake up few hours before the market even opens, to analyzing news and headlines and reading SEC filings, and spending hundreds of hours of screen time observing the market. So this might be an unpopular opinion. Learning to day trade requires a little bit more work, just a little bit more than following chatroom alerts to buy and sell, some DVDs, and some motivational Lamborghini posts on Instagram. I've been trading for more than 6 years now, and I've made literally every single mistake in the book. Because the stock market is unforgiving, the moment I think I know it all is the moment that I will get humbled. Hence the name of the channel, Humbled Trader. So in this video, we'll be talking about the top 5 day trading mistakes beginners make, my personal story with all those mistakes, and how you can identify and fix them in order to avoid blowing up your small account. As long as you remember to tap the like button for a profitable 2020. The number 1 trading mistake beginners make is not having a trading plan. There's a saying that goes something like, if you fail to plan, then you're planning to fail. And that couldn't be any more true for day trading. And I was very guilty of this when I first started. I remember seeing some low float penny stock running from $4 to $6 within minutes. I felt so excited, my heart's beating fast, I'm sweating on my forehead. This is the moment for me to bank. And my brain's telling myself I must buy now or else I'll miss this. Right? Buy now and ask questions later. Well, once in a while I'll get lucky and make a buck or two here and there, but all it really takes is one instance when I buy at the very top. And right after I buy, the stock completely plunges and I lose 10%, 50% of my entire account. Does that sound kind of familiar? I've done it many times in the past. Most of us have. And that's what we call FOMO. Fear of missing out. Before jumping into a trade, we must make a trading plan. I spend about 1.5 to 2 hours each morning before the market opens planning for all my trades. That's right, you cannot just jump out of bed 10 minutes before the market opens and expect it to rain Lamborghinis. Yes, it takes time, but that's exactly the point. Creating a trading plan will help you avoid FOMO. By taking the time to write down your thesis, risk-reward, potential entries, and exits, you're already setting yourself up for a much higher probability of success. Your trading plan should at least include your bias long or short, all the important levels over and under, your exit plans, and your stop losses if you're wrong. Yes, that's right. Part of the trading plan should be planning for your loss, especially in this volatile market. Because it's only after you planned and calculated your losses that you can keep them in control. Planning for your trades is really 90% of the work. And once the market opens, I spend the rest of the 10% of the time executing my plans. And it's just as important to follow your plans as it is to make one. Because if you don't follow your exit plans, it can easily lead to the next trading mistake. Mistake number 2 that beginner traders make: over trading. Because most new traders focus on trading their profit and P&L instead of trading their plans and following the charts. Imagine this: you made a few good trades on the day so far, $100 here, $400 here, and on the screen corner you see a nice $890 P&L. You're feeling pretty good so far, but you really want to hit that nice round number of $1,000. So instead of taking a break during the middle of the day, you keep on trading. And you start entering trades that's perhaps not your A+ setup. and you start losing. That $890 went down to $700 and then $400. This is where you start getting emotional and extremely frustrated. Because not only are you not hitting that nice number of $1,000 on the day, you just went down even lower from the $890 profit half an hour ago. Overtrading leads to emotional trading, which leads to revenge trading. This is where you keep on going back to the same stocks that you just lost on and attempting to get that money back. Well, I think we all know how this story ends. When the market bell rings at 4 o'clock Eastern Time, you've gone down from being up $890 on the day to being down red $300 on the day. And that, my friends, is the story of the first year of my trading journey. I knew how to make money trading in the market, but I could not keep it because I let greed and emotions get in the way by over trading. So here's a few things you can do to avoid over trading. First of all, follow your stop loss. No excuses. If you planned on getting out of that trade at $8, do it. Yes, I know it sucks to take a loss, but it's a planned loss that's within your risk profile as part of your trading plan. Next, walk away from your trading computer and take a break, generally speaking from around 11 a.m. to 2 p.m. market time. These are usually the time where stocks are consolidating in a tight range with low trading volume. Focusing your trading at the open and power hour will allow you to take the meat of the move and not wasting your precious time and money on setups that won't be profitable due to lower volume. And most importantly, when you're feeling distressed and emotional, it's time to shut down and walk away from your computer. Most emotional trading leads to even bigger losses. I know because I've done that many times in the past before. So when you're feeling that emotions start to kick in, it's time to take a break. The market will always be back tomorrow and the next day. Now let's move on to the third mistake beginner traders make, and that is not smashing the like button at the bottom of this video. Not only do you get no BS day trading content here on the channel, you also get a free subscription of bad jokes. Beat that, Netflix and Disney. The third mistake beginner traders make is not spending enough time on paper trading before going in live. Okay, I get it. People want to make fast money. I was guilty of that myself. Instead of spending 1 or 2 months in simulated trading and learning all the mechanics, I jumped right in with live trading account and my hard-earned money. And let's just say I wish I hadn't done that. Paper trading, which is trading with simulated money on live charts, allows you to learn to plan for your trades like we talked about earlier and getting familiar with all the technicalities and broker interface. There's really nothing more frustrating than accidentally selling the entire position when you meant to scale out. Or not knowing how to change your long orders to a short. But hey, like I said before, I've made every single mistake in the book. So that's why I'm recommending all the beginner traders starting out to use paper trading. And you gotta be disciplined and treat your paper trading account as if it's real money. That means if you're actually gonna be funding a live account with only $5,000, then paper trade with $5,000. Not the default $1 million paper trading account that many brokers allow you to have. Not only will paper trading allow you to get used to your broker interface, it'll also allow you to get the screen time that you need in order to learn price action. We've all seen these chart templates out there with these beautiful patterns that make trading seem so simple. But in all honesty, memorizing patterns is all in hindsight. The only real-time indicator is price action. Watching how these green and red candlesticks develop in real time and observing how the stock reacts to various news. These are the kind of experience that takes time in front of the screen to pick up, and all the traders have to learn at their own pace. Day trading beginner, mistake number 4, scaling up your size too quickly. I remember how happy I was after I started making around $100 each day. $100 a day, that's $500 a week. Not bad for a couple of hours of work and heading out to my real job. Small gains add up, and remember, I was still making pretty good income from my full-time job. And then one day I had this brilliant idea. What if I just add a 0 at the end of my position size? If I just use 10 times my normal size, then instead of just $100, I'll make $1,000 a day, and 5 days a week that'll be $5,000. Wow, what a genius plan. Let's just say that very genius plan of mine didn't really work out that well. Not only did I lose the small $100 wins I built up the last few weeks, I completely blew up my account. Because you see, I did not take into consideration all the emotional stress that comes with scaling up so quickly. If my risk was originally losing $50 in order to make $100, now my new risk is $500 in order to make $1,000. And while I was ready to make that $5,000 per week goal, I was not emotionally ready to handle the $2,000, $3,000 losses. When you scale up your position size too quickly, that will lead to emotional trading. So if you are thinking of scaling up, that's great. Good for you. You're on the right track. But make sure you're scaling up slowly. Give it a couple of weeks and couple of months before adding quarter sizes and then doubling your size eventually. Take it slow and allow yourself to mentally prepare for the possible bigger proportional losses. Mistake number 5 that beginner traders make: following chat room alerts. Yes, I know I saved the best for last. Yes, I have mentioned before that I think it's extremely beneficial to trade with a like-minded community of traders and receive feedback and trade ideas, but following chatroom alerts to buy and sell, that's a completely different story. I think following others will put you months, if not years, behind your journey to become a consistently profitable day trader. And here's why. So first of all, most of these chat rooms that give you alerts, they tell you to buy and sell without breaking down why they are doing so. This creates followers, which are known as sheep, who blindly buys everything the moderator tells them to buy and sell. And guess what? Most of these sheep lose money because they have no idea why they bought the stock in the first place. So when the stock just drops a little bit, they all hit the bid to get out and market order out for a huge loss. I'm not saying you can never make any money following chatroom alerts. Maybe if you're fast enough with these hotkeys and you have no internet latency. But in the long run, following chatroom alerts will drain your account, especially if you're in these low-float penny stock chat rooms that have thousands of followers. This is what we call potential chatroom pumps. So picture this in your head. The moderator starts scooping up shares of these low-float, low-volume penny stocks. Then he alerts thousands of his followers to buy. And guess what? Because these stocks are low volume and low float, the stock actually surges 20%, 50% within seconds. Seeing that the price has surged, the moderator tells everyone to sell after he has already locked in for a fat profit. And you know what happens next. All the thousands of followers sell at the same time. And like I mentioned before, if you are a lucky sheep with really fast internet connection, you probably made some money. But the majority of those followers will be left stuck at the very top and holding the bag. I'm very sad and embarrassed to say that in my first year of trading, I probably tried out 5 to 6 of these penny stock chat rooms, and I've seen all these instances firsthand. I was a sheep too, and I was left holding so many bags, and let me tell you, they are not the kind of bags that people actually want. Not the Louis Vuitton and definitely not the Gucci. But looking back, I felt like I deserved those losses. I bought into the dream that I can make millions of dollars just by following what other people are doing. Trading is not easy, But it could be learned if you're willing to put in the time and the work slowly. Like I mentioned in so many of my previous videos, it all comes down to sacrifices. Do you want this bad enough? Maybe it means partying less on weekends, going out only once or twice a week, and only getting 6 hours of sleep, and basically just not have a life. Let me know what you think about these top 5 beginner trader mistakes I mentioned in the video, and have you done any of these yourself? As always, if this video really helped you out, please remember to drop a like at the bottom of the video. I'd really appreciate you, my friends. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next week. Hey guys, thanks for watching. I hope you enjoyed the video and the bad jokes. If you want to see more day trading content, make sure to subscribe and follow me on Twitter and Instagram for more. If you'd like to trade with me daily and get my free weekend watch list and trading journal, make sure to check out the links below for more resources. Stay green, stay positive, and I'll see you guys next time.